Hello, traders and enthusiasts. Welcome back to our channel, where we dive deep into the world of Forex trading to help you make smarter, more informed trading decisions. Today, we're unlocking the power of Fibonacci levels, a topic that's as fascinating as it is practical for anyone looking to gain an edge in the market. So, why Fibonacci? Well, the Fibonacci sequence is a time-tested mathematical concept that transcends disciplines, from nature to art, and yes, even finances. In Forex trading, it serves as a critical tool for identifying potential support and resistance levels. Imagine being able to pinpoint the perfect entry and exit points in your trades. Intriguing, right? That's exactly what Fibonacci retracements and extensions can offer. Using Fibonacci retracements, traders can anticipate where price reversals might occur. It's all about observing past price movements, identifying significant highs and lows, and plotting Fibonacci levels to navigate price pullbacks. Let's say you're analyzing the EUR-USD pair. By noting a swing low and swing high, and applying your Fibonacci levels, you might find a lucrative entry point when the price retraces to that 50% level and then starts to climb again. But it doesn't stop there. Fibonacci extensions are equally powerful, offering insights into potential exit points. When a price resumes its trend after a retracement, these extensions help predict how far the trend might extend. Imagine setting your exit strategy with precision using the 161.8% level, backed by other indicators like RSI for maximum confidence. Now remember, the art of trading improves exponentially when you engage deeply in research and learn from the ideas of other seasoned traders. That's why you should consider subscribing to our channel if you haven't already. Stay updated on the latest insights, strategies, and innovations in trading. Together, we can build a community of informed traders, ready to harness tools like Fibonacci to their fullest potential. As we near the end of this enlightening session, it's crucial to recognize one undeniable truth. Trading is inherently risky. It's not enough to know the tools. You must understand that no single strategy can guarantee success. Always trade mindfully and avoid committing all your funds to trading. Engaging multiple strategies and maintaining a diversified approach ensures your trading endeavors are both exciting and sustainable. Thank you for watching and embarking on this journey of trading discovery with us. Keep learning, stay adaptable, and most importantly, trade wisely. Until next time, happy trading.